Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
LME 3-month nickel. The break higher during Christmas week in this market up over the gold long moving average, currently at 15,570, as well over the key levels at 15,665 and 15,840, saw a significant release of bullish energy that had been pent up for about 2 years. The run up to this move higher was formed from the double bottom built over November and December 2025 and the monthly key reversal up in December last year. These two ignited the rise, extending into late January this year. So what has this move up left us with? Well, as I said 2 weeks ago, and this is actually a long piece, so I apologize for that, but it is relevant, and I quote, "We have 4 features to watch out for. The first was the possible double top that now might be possible triple top formed over January. This pattern depends on one key factor, whether or not prices can drop down to the low zone of 16,835, seen 5 weeks, seen 3 weeks ago, and then after that whether the market can press even lower or not. At the moment this seems unlikely, but it's still one to watch. The second is to consider if prices try to get down to that 16,835 zone and fail. We might then have to regard the whole December 2025 today action or any part therein as a possible bullish halfway hesitation. This is another thing to watch. Thirdly, we have a crossover seen 3 weeks ago, so that's actually now 5 weeks ago. 3 weeks ago, the rising green short medium moving average currently at 16,460. The mauve medium moving average currently 15,860 and the gold long moving average currently 15,570. This is a bow tie formation. The moving averages have gone in and exited out in the right order, with a bullish tinge about them. Consequently, we need to look at the future, and that means that between 15 to 20 sessions after crossover, we can look to see one or more of the following: a change in trend, a reinforcement of an existing trend, volatility. Thus, please pay special attention to this market between the 29th of January and the 5th of February, as that is the window. The final feature is whether to regard the whole January action as a possible ascending wedge pattern, currently 18,545 to 19,450. I've not highlighted the pattern for now, but it can still be seen on my daily chart as we are still deep within this pattern. Now, I can't give an idea of direction or targets either above or below, but I can give an idea of the potentials involved. Thus, for a confirmed break higher, would have a primary potential of plus $1,230 for the break and a secondary harder to reach potential of plus $1,950. For a confirmed break lower, we would have a primary potential of minus $625 from the break and a secondary harder to reach potential of minus $1,950. Please be wary, as any break higher or lower may first be a false break before a true break occurs. End of quote. Well, as you can see, the market chose the ascending wedge pattern idea with a break lower late 2 weeks ago. This gave a primary target in the 17,400 zone, which was reached the same day, but a harder to reach secondary target X1, which is still down at 16,075 zone. Now, this secondary target may be unattainable for this pattern, as the action over the last 2 weeks can be one of 2 ways. It could be a possible horn bottom, in which case we would be looking higher, though as yet the market has not triggered the appropriate level, which is up at 17,680. Or it could be a possible bearish halfway hesitation, a considerable distance on the downside, but again the market has not triggered this level, which is down at the 50% Fibonacci line of the 2025 to 2026 move at 16,515. What is interesting is that perhaps just perhaps, the market is not that interested in doing either right now. I would suggest watch, wait and see. LME 3-month zinc. This had been here and still are a number of patterns affecting the market in recent times, all happening at the same time. The first has been, and I suppose still is, in an echoey sort of way, the dark blue mid-July to early October 2025 bull channel, currently 31.30 to 33.43. Now this captured most of the action since July last year, though in reality January this year, but has been breached a number of times throughout that period, though the market still will not let go of this broken dark blue channel line as it sits as support on today's action. The second pattern is the bright red May 23 to April 25 bullish Andrews pitchfork, and especially the middle time, which is currently at 33.39. This halted the rise 4 weeks ago, along with the dark blue, now breached, if not completely broken as yet, upper bull channel line. This breach high is also being capped, well, sort of, for now, by the two 50% Fibonacci lines of the March 20 to March 22 move at 33.29 and the 50% Fibonacci line of the April 22 to May 23 move at 33.77. A third pattern has emerged that became evident 2 weeks ago, and that is the bright green mid-December last year to date, imperfect but seemingly still valid, bright green steeper bull channel, currently 32.46 to 34.53. which seems to be taking over, for now at least, the running of this market higher. Now, I pointed out last time that the dark blue upper trend line crosses over the bright red middle time about the 9th of February. And I think since then, especially with last Friday's combined key reversal up and bullish engulfing pattern, this bright green bull channel may be the one to watch going forward. We shall see. LME 3-month tin. We had a gapping move higher in mid-January that started the whole huge move higher. The rise was fairly swift until the market breached the previous all-time high seen back in 2022 at 51,000. The day after this happened, the market started to fade. However, prices turned back higher just after mid-January, and we rose up to reach the one big old pattern dominating this market. The bright red upper time, currently at 58,185, of the big old 2020 to 2022 bullish shift pitchfork. This was tested twice, but held as resistance 2 weeks ago, which is very telling for a pattern that is between 4 and 6 years old. Now, 3 weeks ago, I said about the future movements here, and I quote, "I think there are two courses for this market to go. The first is to try and replicate what we have seen in other metal markets, move up and try and form a possible double top. In this regard, I think the market is a little late when compared to other metals, and I think even possibly too late for such a pattern, but we shall see. The second is to fall back and fill in the gap left in early January below 45,780 to 46,255, and then decide what to do." End of quote. Now, I also added 2 weeks ago, and I quote, "There is a third way, and the market has seemingly chosen to strike for that, and that is to look at the whole mid-January today action, indeed the whole late December last year today action as a possible very large bullish halfway hesitation." End of quote. And indeed, 2 weeks ago that looked like the way it might go. However, since then, yet another pattern, a fourth pattern has emerged. That seems to right now be the dominant pattern here. A possible January-based head and shoulders top, a quite large one. This pattern depends on one factor, and that is the dark blue neckline for this pattern, currently 44,640. This pattern, this neckline needs to be broken on the downside to become a head and shoulders top, or it needs to be rejected on the upside to form a rarer head and shoulders continuation pattern. Now, though we have had lower lows this week than last week, usually a bearish sign, I would watch out for that creeping up from below the green short medium moving average, currently at 45,095. Now, that's already turned prices higher late last week for bullish daily pattern and a bullish 2-day pattern. Thus, what happens between the dark blue neckline below and the high of last week at 50,695 may well determine the future for some considerable time.
Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.